And now this. We now know that Massachusetts lost billions of dollars after its millionaire tax took effect. Back to you, Madison. How many people left the state and how much money did they take with them?
So we're talking about 2023 because that's when this tax took effect. And in that same year, the state lost 41,000 residents. And with them, they took $4.2 billion in adjusted gross income. The amount of income lost was an 8% increase year over year, even as the total number of taxpayers leaving actually decreased. Most of that money came from the wealthy. People in the top tax bracket in Massachusetts responsible for 70% of that $4.2 billion that left the state. Money moves, and tax experts say it should be no surprise that a clearly unfavorable policy for a specific group saw migration of that group.
With these taxes, the state is not signaling that these residents are, and their contributions and their investment in the state is either respected or welcome. Neutrality in the tax code is really important. It's not the code's responsibility, the tax code, that is, to pick winners and losers. And in some of these cases, there's almost a punitive aspect to earning and investing. Lawmakers would do well to consider that.
But supporters say the tax is working. So far, it has brought $6 billion in revenue to the state. And in fiscal year 2026, collections are up 19%. But critics warn it's driving away entrepreneurs, which is why there will be 2 ballot questions this November in the state. One would lower the state income tax to 4% from 5%. And the other ballot question is capping how much state revenue can increase in a given year. Massachusetts Governor Maura Healey has blasted those 2 ballot initiatives, saying that it would create a multi-billion-dollar hole in the already tight state budget. But at a time when we see all of these states looking at millionaire, billionaire taxes, Massachusetts is an example of what happens when they're passed.
We can learn from Massachusetts, I think. Thanks, Madison.